Hello, and welcome to P.I.T Exchange, a podcast by Currency Research. Join us as we discuss the latest in payments innovation and technology with the industry's most innovative thought leaders. Today, we're bringing you something special, the CBPC Roadshow, 4 exclusive conversations with leaders from across the global payments ecosystem, leading up to the Central Bank Payments Conference this August. Today's payments are changing and moving around the world faster than ever before, and P.I.T Exchange gives you the knowledge and insights to keep up. Sit back and relax as we join Currency Research, exchanging ideas with today's CBPC Roadshow guest.
Hello and welcome to the latest episode of the P.I.T Exchange by Currency Research. And today we are recording a special Road to CBPC, the Central Bank Payments Conference. My name is Jordan Taylor, and I am pleased to be welcomed today by Ezechiel Copic of Visa and Elif Akoğuz, who is a PhD candidate from KU Leuven in Belgium. It's a pleasure to have you both.
Pleasure to be here.
Thanks for having us.
Of course. And the reason we wanted to do this, as you both know, is that we were supposed to have a little event last month that global forces conspired to postpone for us, but we wanted to maintain a connection with the conference community, and so we thought it would be a great idea to connect with you both. Zeke, as you know, as you both know, obviously, we have implemented this year for the first time at the Central Bank Payments Conference a new research initiative in which we initiated a call for papers, really trying to connect the academic world, central bank research world with policymakers. And so we are thrilled to have the support of Visa for that initiative. And Elif is one of our winners who wrote a paper submitted for us. And so we are happy to have them both. Zeke, if I could just start with you, and maybe you can talk about your role at the Visa Economic Empowerment Institute, and perhaps a little bit about why Visa is supporting the CR Payments Research Partnership.
Yeah, listen, thanks, Jordan. Elif, it's really nice to meet you. And again, I am definitely looking forward to seeing all of you guys in Istanbul. Fingers crossed that obviously this will go on without a hitch. So a little bit about myself. So my name is Ezechiel Copic, Zeke for short. I work as a director at the Visa Economic Empowerment Institute. We are effectively, so we're housed under Visa's Global Government Affairs division, and we're effectively Visa's in-house policy think tank. We focus on creating new knowledge at the intersection of payments, innovation, and regulation. So, I specifically cover things like, new digital asset technology like stable coins and CBDCs and tokenized deposits. But we also do a lot of other work around instant payments, around more kind of traditional economic issues and topics like growth and productivity. And so our group basically, apart from the research, we really try and promote a dialogue among key stakeholders, which is why obviously we're so thrilled to be sponsoring the new research program that Currency Research is doing at the Central Bank Payments Conference. We do host a lot of events. We bring together a community of experts around the world to talk about these things. And when it comes to specifically the research agenda, right? One of the things that we're really passionate about, obviously, is bringing together academics, the public sector, as well as the private sector. Because we really think that decision makers really need to have access to all of this timely evidence-based insight. This landscape moves really quickly, right? I mean, lots of different things, whether it's digital assets or just new payment innovation just in general. And so we really wanted to, help sponsor and bring together all of these researchers who are doing some really fascinating stuff because it actually helps give policymakers, industry, stakeholders, the tools they need to really solve the real world problems. So academics like Elif and many others who are going to present, right? They bring this methodological rigor and these fresh theoretical like insights and frameworks together. Obviously, having the public sector, having a lot of our central bank colleagues and people maybe from finance ministries and things like that, they offer the on the ground policy context. And then for the private sector, right, we hopefully we try and provide like real world data, our own experience, and then the ability to kind of move these insights into practice really quickly. And so, we kind of view this, right, as making research not only intellectually strong and sort of intellectually curious, but also hopefully that it's actionable, so that we can kind of create this workspace for all of us to kind of work together. And so I'm really excited, obviously getting to talk to you. I'm excited to hear all the research from all of the people who submitted, and then having a great dialogue. So I look forward to it. Thanks for having us.
Absolutely, of course. Thank you for that. Elif, if you wouldn't mind saying a few words about your background, your research interests, and of course the paper that brought you to our attention.
I'm a researcher from KU Leuven who specializes on how financial technologies and data regulations change the informational space of our economies, and how we can change by determining which actors get access to what piece of information, how these policies or technologies can shape economic outcomes like competition, market efficiency, or consumer welfare. And in terms of the topics that I would like to study, actually, like some of the things that Ezechiel said quite align as well with how I would like to pursue research. I like to work on topics that are closely related with policy questions. And in doing so, I would like to always, even when doing policy work, theoretical work, I would like to focus on questions that can inform policy decisions. And because of that, particularly, I'm very excited to attend the conference in Istanbul in the upcoming months, because I also believe it's very crucial, especially for the kind of research that I conduct. It's very crucial to have close ties, not only with policy makers, but also with the industry, which is something that can be one of the deficiencies of academia at times. We have like very broad and philosophical or theoretical understandings of how certain mechanisms work, but there are some very crucial aspects about how things work in practice that we may not always be completely aware about. And then those can be the most interesting additions, or that can be what makes or breaks a paper, what makes it relevant or interesting. So I'm really looking forward to understand the industry perspective of payments a bit with this conference. And if I may briefly discuss about like what I will present at the CBPC.
Those numbers roll right off the tongue.
It is, yeah, it's a mouthful abbreviation. But yeah, I will be focusing on a specific financial regulation that is called open banking. And for those who may not have heard of it before, it is the umbrella term that we use to refer to data regulations that oblige banks to share their clients' financial data with third-party service providers upon the client's request. So the objective behind this policy is to foster innovation and competition by democratizing access to financial data, which was until very recently exclusively accessed by incumbent financial players. So by opening access to this sort of data to new and small entrants, the policy is expected to create like lower barriers to entry, improve innovation and competition. So what we discuss in our paper is that, in fact, when we look at this policy in a more comprehensive, more holistic point of view, some of the expectations we have from this policy can indeed be reversed. So one of the most like straightforward expectations about open banking policy is that consumers stand to benefit from it, right? They will have access ideally to cheaper products or more innovative products, new products, especially in financial industries where financial data is a crucial input. And again, simultaneously to that, banks are expected to lose profits because now they no longer have access to an exclusive data that they can leverage later on in services where financial data becomes a crucial input. So to give some examples, this could be credit services, insurance services, payment initiations, and many other. So open banking basically means that banks will lose their upper hand in the provision of these services. So the first implication of such a policy is banks lose and consumers win. But what we establish with this paper is that when we look into the spillover effects of this sort of policy, this expected outcome can be completely reversed. To illustrate that, let me just give the example of payment data. So when you open, without payment data being shared with other parties, banks have incentive to subsidize payment services because once acquiring a payment client, they can later on leverage that relation, that exclusive access to data to provide new services and products at an advantage to this consumer. With open banking, that incentive is eliminated. So we argue that when open banking is implemented, this is going to lead to a hike in the payment service fee of banks. Simultaneously, there will be a demand shift for this sort of products because with open banking, having access to a bank account means much more than what it used to mean. Now it becomes the gateway to a bunch of new, potentially cheaper or more innovative products or services. And in order to access all these products and services, you first have to acquire a payment account. So we argue that as long as banks hold some sort of market power in providing these services, this demand rise from consumers will also result in a hike in payment prices. So this altogether implies that actually, while in like data-driven industries, we see banks will lose out just like planned, and consumers will gain just like planned. But when we look at the markets where data is produced, for instance, the payment market, we see the exact opposite impact because we expect the payment prices to rise, and that will hurt consumers and benefit banks. So we see that in certain cases, this second order impact can actually reverse the first order impact and leave consumers actually worse off than the case before.
I want to jump in. That was a wonderful synopsis, Elif. Thank you. Were you as surprised as I think I was? And I don't want to speak for Ezechiel or anyone else who read the paper, but I think some of your basic conclusions and findings were very counterintuitive to people who have a even a limited understanding of open banking or open finance, which you also get into in a subsequent section. How much did your findings deviate from your expectations? You, and I know you had a few co-authors, and feel free to give them a little shout out if you like as well.
Yes, thank you for reminding me of that. It slipped my mind. So this is in fact a paper jointly written by me and Tarek Rokni and Tamas Vadas. And I think we did not hold any clear expectations of what we thought we would see as a result of this study. It can definitely, there are counterintuitive results, but it is because we have a theoretical setting where we kind of isolated certain impacts in order to understand how they correlate, how they interact with each other, while deliberately choosing to leave out some other real life dynamics. For instance, implementing open banking is a costly process, right? So we do not currently account for that cost. And once you account for the IT cost, liability cost, and all that, banks may actually, of course, be worse off, but then how they started. But leaving that aside, like this is, of course, a possibility. We just wanted to show that the simple observation that by changing the incentives around data production, you are not only changing like the results in the market where data is used, but also in the market where data is generated. Data is not an exogenous entity, right? It is a byproduct of the activities conducted by financial entities. So it is subject to these incentives, and leaving cost aside to show that the loss in data-driven markets can potentially be recovered in the data producing markets for financial entities is, I think, already like a striking finding on its own.
I want to sort of pivot to the policy implications for this, because as you know, and Zeke, as I'm sure you know as well, and as you point out in your paper, open banking and open finance are proliferating around the globe. How do you see, or let me frame it another way, if you could have a conversation with a regulator who was taking steps to implement one of these regimes, how might you suggest that they construct that based on what you've found here? And are there any regimes that you're aware of that, if not, obviously they're not necessarily taking into account your paper, but perhaps you're seeing some of these things play out that you've pointed, if that's possible?
Well, I would say in the current regulatory space and the discussions among the stakeholders seem to focus more on the potential downsides of open banking for the banking industry. I did not see any discussion up until our paper, to the best of my knowledge, about the spillover impacts of this sort of policies into markets where data is produced, in this case, like payment markets. I think it is an overlooked factor, and it needs to be accounted for more clearly in policy discussions as well. But that being said, like I wouldn't go as far as saying like, okay, open banking is certainly a bad for consumers or something that banks should definitely look forward to. But there is definitely a very important dynamic that comes into play that is so far completely disregarded by most analysis of it. And it has enough power to reverse what we think about it in certain cases. In terms of what I would not necessarily recommend, but at least like I could make one remark in terms of like optimal policymaking in this domain, is that it is important to differentiate between different kind of payment providers. So in our paper, we look into different payment providers in terms of whether they are vertically integrated to other services or not. So a traditional bank, for instance, is not only providing payment services, but also credit, insurance, all sorts of services where that is intrinsically linked to payments through the information domain. Whereas stablecoins, CBDC, all sorts of even electronic money institutions, like all sorts of specialized payment providers, they operate with a different mechanism. They are not optimizing several services all together. So when you impose data sharing mandates on these two very different kind of payment provider, you arrive at different results. So what we notice is that with banks, we have to keep in mind that we run the risk of losing the potential subsidy that the payment accounts have been receiving because of this data advantage that banks had before. Whereas opening other payments, specialized payment alternatives like CBDCs or stable coins, enabling data sharing with these alternatives, which would also be probably technologically also an easier endeavor given the structure, the organization of these payment methods. Here we do not lose any subsidy. In fact, here open banking implementations have a more likely to have a more positive benefit compared to mandating open banking on firms, on banks with integrated business objectives. That is not to say that we should not do it, but that is to say that we should be aware that because of banks optimizing different products simultaneously, this policy will have far-reaching implications that spread into other markets, especially when it's directed into this vertically integrated entity. So maybe we should consider the alternative of focusing on specialized payment providers as potential sources of open data havens, let's say.
Yeah, thank you for that, Elif. You anticipated my next question. You must have known where I was headed. Zeke, I know that stable coins obviously are something that you spend a lot of time thinking about and writing about. How do you see any have you considered any of the sort of implications between some of the things that Elif has written about and talked about here today with some of your own interests with respect to digital currencies and cross-border payments and regulation?
Yeah, I mean, absolutely. I mean, this Elif's, comments sort of to me really, crystallized this need for having research forums like this. Because one of the things, so I used to be a former central banker at the Federal Reserve Bank in New York. And, central bankers, obviously, their main focus is, they're worried about financial stability. So when they craft regulations, when they do these things, right, they want to make sure that they are ensuring the stability of the system, both from a financial perspective, from a macroeconomic perspective, right? And so that's really where their focus and intention lies. But the reality is that all of these, we don't really know what the regulations are going to sort of what the impact is that they're going to have until they're implemented, right? Until they're out in the wild. And so, Elif's research is really important because, one of the things, and she hit on two things that I think is really important when we think about regulations. One is the importance of information and data, and how crucial that is, especially when you have these big information like asymmetry gaps, right? I mean, people really profit on the fact that like some people know this information and some don't. And the other big issue that I think central banks and regulators need more help in understanding is really around the economic incentives, right? Central banks are not profit-making entities, right? And so they need to better understand the economic incentives that issuers have, financial institutions have, when they're kind of creating these products. And so you brought up stable coins, and so for example, I do a lot of research around the implications that stablecoin regulation has on stablecoin issuers, kind of specifically, but then kind of the macroeconomic ecosystem more broadly. And so, for example, looking at say the Genius Act in the US compared to say MiCA in Europe, right? Both of them strive for basically the same outcome, right? Which is stability. They want to make sure that consumers are protected, that they want to make sure that stablecoin issuers, when they're issuing these stablecoins, have a solid base behind it, right? So they're backed 1-to-1 by reserves. But both of these policies, they can tend to, while they want the same outcome, they go about it in slightly different ways that can have very different and significant ramifications. So when you look at, say, Genius, they're very specific on the assets that stablecoin issuers can hold. So they list them out quite clearly. So cash, deposits, U.S. Treasuries, money market funds, things like that. Whereas MiCA is a little bit more vague. They just say high quality liquid assets. So it's a little bit more difficult for issuers to fully understand, but I mean, you get the general sense. And then when it comes to asset ratios, the Genius Act doesn't actually give any guidance. It just says, listen, you have to invest in these assets, but we're not going to tell you that you have to have so much in deposits and so much in, treasury bills and things like that. Where MiCA is quite the opposite, right? So MiCA says, if you're a stablecoin issuer, you have to have at least 30% in bank deposits. And if you get to if you get to a size like I think it's like 5 billion in issuance, then you have to have 60% in bank deposits. And so all of those have consequences, right? Whether intended or unintended. And so the reality is when you actually look at the impact, the economic impact. And so I wrote this paper kind of using the efficient frontier portfolio model. And so stablecoin issuers in the US, because of the regulations and because of the underlying assets, can sort of expect to make around 3 to 3.5% of expected revenue, expected return on the assets that they hold. So it's not a lot, and this also is before any operational costs or anything like that. But in Europe, that number drops dramatically to about 40 basis points, between 40 basis points and 1%. Depending on how large you are as an institution. So you can see that these two regulations have dramatically different impacts on then the economic incentives, which then can also have then knock-on effects as to the product, the product availability for consumers and things like that. And so all of this research, right, having these forums and having a way for industry players like Visa to talk about these issues, as well as, academic researchers who are really diving in deeply and provide a lot of this theoretical frameworks and the credibility, right, to do a lot of this like very in-depth thinking. All of us hopefully then will help inform policymakers. And that's why I love forums like this a lot. So, yeah.
Terrific. I want to ask you both something that you've each alluded to, and Zeke, you kind of touched on it just now. I read something a few weeks ago from a researcher at a G7 central bank. I don't need to name which central bank. And they said that it's only in the last 10 years or so, and they're only speaking for this one particular bank, but within the last decade, research within the institution was connected to policy. That prior to that, research seemingly was just for the sake of research at this one particular central bank. As a former central banker, and obviously somebody who works often with the public sector, is that surprising? And if it's the case at this particular institution, does it speak to potential gaps elsewhere? Are we not quite as aligned? Is the research not really meeting the policymakers where we need it to at this point? And obviously, Elif, sorry, Zeke. And obviously, Elif, does that sort of statement surprise you as well as a researcher?
I wouldn't say it surprises me. It is true. I think most economists would agree that there is a big literature, especially in theoretical work, that can be quite detached from policymaking or sometimes certain realities of the market. And I believe that this sort of research holds its own place. It serves a certain purpose of its own, that is to uncover more core dynamics, like certain overarching dynamics and mechanisms and insights that we can produce and apply to many markets, many conditions. In order to understand these sort of things, you have to step back a bit and isolate yourself from the nitty-gritty details and really understand the deep way what's happening underneath of everything. But then when it comes to policy, of course, we need to try to get back into closer to the question where we are and the specifics of the situation, and define our medium more carefully and probably produce results that cannot be broadly applicable, but as accurate as possible to the question at hand. I believe that the second kind of especially theoretical work is not always that easy to find, but it is out there, and I find it particularly the most interesting kind of work. But I am not surprised that I never worked at a central bank, but I wouldn't be surprised that people share the sentiment that the research does not touch policy enough. I think being joining you from Belgium, I am in a kind of biased environment. We are always in close contact with the European institutions, and this is a place to be working at the intersection of policy and research. But I think probably we are on the luckier side in that. But the field of economics in general could probably benefit from having more research produced that really truly takes the realities of industry and policy making into account more.
Yeah, and I think for me, initially, Jordan, when you said what you said, I was initially surprised that central banks felt, or at least whatever this institution was, felt that their research maybe wasn't as focused on policy. But so the more I thought about it, again, it goes to this information asymmetry gap. When I was at the New York Fed, I worked in the markets group, and the markets group basically was the operational arm of the entire Federal Reserve System. And so we were in the market every day, trading, talking to market participants, talking to broker dealers. So we had all of this information and understanding of how the market really works. And so I think a lot of that then fed itself into the research that our super smart economists, on our research side were doing, because then we could share information. We could share hey, this is happening in the market. Do we have a sense as to why this is happening? And it could sort of inform their research. And then from their research, we would get smarter about how the market works. And it would kind of sort of had this virtual cycle. I think for institutions, whether they're central banks or finance ministries or whatever, who may not have some of that on the ground experience, maybe then it can create this environment where you are writing in a more theoretical kind of an ivory tower way, where you don't fully understand how markets are working. You understand how they should work, right? But you don't necessarily understand how they actually work. And so I think, again, it's one of these things where if we can start to explain to them and share insights, right, that they can get a better sense of that, right? And that will come not only from the industry side on how things work, but then also, from the academic side on then really kind of diving into that and answering then those questions. So
I think, obviously, we are very hopeful that we can get together in late August. I think August 31st through the 2nd of September in Istanbul. Any sort of closing remarks about your paper? Anything that perhaps we didn't touch on? And also be curious to know what sort of research pursuits you have in the pipeline, or what you're starting to kick around mentally.
Sure. Well, in terms of the research that I was just discussing, the key outcome I would like to leave anyone who listens to this would be that it is very important to understand, especially in financial markets, where markets are deeply interconnected with each other through many dimensions, including information. I think policymakers should always have the tendency to evaluate the results of their policy with a holistic view. Examining markets in isolation can lead to deceiving outcomes. It can mislead us. And when it comes to financial policymaking, I think it's very important to keep in mind how interconnected all these markets are to each other and how much they're likely to impact each other. In my pipeline after this, I have a paper that is on the privacy and cybersecurity investment decisions of platforms, particularly with payment platforms in mind, trying to understand what drives the decisions regarding how much privacy to give to users, and also how to invest in cybersecurity, especially in an environment where users may not be in position to properly evaluate and account for those cybersecurity efforts, because they may not have the sophistication to actually go through your cybersecurity policies. This sort of information asymmetry leads to certain inefficiencies. And in our paper, we again try to look at it from a policymaker's perspective and see how can we approach this problem? Should we provide some cybersecurity standards to the industry to allow them to coordinate, or should we just mandate certain platforms to actually comply with it? What would be the best approach? So that will be what's coming next. And before I leave you to it, I just want to say that I'm very pleased to be here, and I'm really looking forward to have more conversations on this in Istanbul. I cannot overemphasize personally how much I believe academia and probably both other sectors as well can benefit from more communication with each other in creating new research and new products. So thank you for that initiative.
Of course. Well, we're thrilled that obviously that you submitted your paper and that it was so well received. And thank you for joining us today. I think I know that I think that you have a presentation next month. Is that right? For the BIS?
Me? Oh, yes. Hey. Sorry, you know my schedule better than I do. I do.
Now yeah. I feel like a weirdo.
No, I just have the worst memory ever. Without my calendar, I am no one. I have to check everything.
Well, best of luck with that. And
Thank you.
I assume you're presenting on what we talked about here, what you wrote?
Yes, indeed. If anyone finds themselves at Gerzensee in May, I think 18th, you can always come listen to it live.
Excellent. Well, we will link to your paper in the show notes here when the issue is published. But we thank you for taking the time, and we look forward to obviously seeing you in person. No more of this virtual stuff. So wonderful to have you, Ezechiel. Thank you for joining us. I know we ask a lot of you. At least we have recently, so thank you for putting up with us again. Before you go, and last thing that Elif said sort of reminded me, I know you're working on a fragmentation indicator, and I know it's not going to go live until July. How are things proceeding with that? If you can offer anything up at all.
I mean, so I'm not directly involved in it, but our team is certainly involved in it, and I think it speaks again to this need for information, this need to provide data, so that everybody can kind of be understanding the situation. And so one of the things that we are working on is this global fragmentation index, to really kind of understand how the payment system can be fragmented, whether that's through regulations or whether that's through laws and public policies, even just all these market dynamics as well, to get a really better sense of that. And so we're happy we'll be sharing that. I think it should go fully live, maybe July, but maybe more closer to actually when the conference is. So I'm happy to, I believe we'll probably write up a quick article that we will share in the Central Bank Payments newsletter. So hopefully I think in the August edition, just to give a preview of that, to look at that. But yeah, so we're excited. And let me just say again, I'm really happy and really thrilled that Currency Research has started this. I think it's really important. I think it's going to be a great complement to the conversations that we have. I've always had great conversations, always at the Central Bank Payments Conference, but I think one of the things that is always really helpful is when someone can say, look, here is my idea. Here's my hypothesis. Here's the data. Here's, how I am looking to address this issue. And so we can all read about it. We can all look at it. We can all kind of come to the table with sort of the same information, and then share our different perspectives, right? Because I'm sure I have a different perspective than many of the central banks. They're going to be there on open banking or instant payments or stable coins or whatever it is, right? And one of the things that we really crucially need is more of that data, so that we can all be looking at the sort of the same data or looking at the same frameworks, or ways in which to study the topic. And so having amazing researchers like Elif and others, who are bringing that data, bringing that perspective, bringing that analytical rigor to this will be super helpful. So we're very excited. And yes, I think also something to be said for being in person as well, to continue these conversations without some of the technical hiccups and things like that, which I know I caused previously. So I also understand all of this and appreciate your patience. So.
Well, I'm pretty sure we've all been on the wrong end of technical trouble, but I couldn't agree more with what each of you said. And I think I speak for everybody at Currency Research. We are very much looking forward to meeting you both in person and the rest of your fellow researchers, Elif, in August and September in Istanbul. I encourage everyone, if you have an interest in payments or central banking or academic research, to give it a look. Once again, thank you both for taking the time today. I appreciate it very much. This has been a special episode of the P.I.T Exchange on the road to the Central Bank Payments Conference for Currency Research. I'm Jordan Taylor. Thank you once again to Elif Cansu Akoğuz and Ezechiel Copic. Until next time.
Thanks.
Right. Thanks a lot.
Thank you for listening to P.I.T Exchange, a podcast by Currency Research. This episode is part of our CBPC Roadshow series, 4 conversations leading up to the Central Bank Payments Conference this August. Watch the full series at centralbankpaymentsconference.com. Check out our upcoming events and publications at Currency Research and join us for the next stop on the CBPC Roadshow. We'll see you at the Central Bank Payments Conference this August.